Hello everyone, welcome to Smart Investing. Today's video is going to be about the banking services sector. So today I have 5 stocks for you, and we're just going to jump into all the financial data, which will include fundamentals, technicals, and then some quants. So that will be coming up right now. So for the first stock we have is EWBC. I'm outside, so I hope you guys can hear me. If not, then I'll try to speak a little bit louder so that way you guys can hear everything with clarity. So first things up, like we always do in each video, first page, just looking at some numbers here. So I usually look at this part, and then I'll look here, and then I usually look here. I know it's weird like that. I analyze from right to left when I should be really doing it from left to right. But it's just that the numbers that are important to me, they're the ones usually here. And then this is the second of importance to me. And then this is usually last of importance to me. I think that's why I've always done it like that. So that's what it is. So EWBC, East West Bancorp, $66.01. So volume is at 318. The 3-month average was 890. So slightly lower, but just with that general number at 318, I'd still say that's pretty active. Now, PE showing me that it's 9.3. That's pretty undervalued. Dividend is at 1.6. It's pretty low again in terms of dividend payments for the year. I've seen other payments bigger than that. So from my perspective, I don't think this is a good income stock. Mostly for the banking sector, they're usually good for momentum, which is, short-term plays, and that would be about it. It could range from days to months. I wouldn't say years, but if worse comes to worse, maybe that may be the case, but I don't think it'll be for years as of right now. So definitely not a stock I would invest in the long term. $9.29 billion company. It's not really small compared to others, so it's a little bit bigger, which is fine. 52-week high and low. That is a difference of at least $30. So this has some price momentum, I would say. And I wouldn't say it's close to its lows, but it's getting there if the trend continues. I'd say give it a few more weeks, and I don't know. We'll see if it goes into lower lows. Earnings per share is at $7, so that's actually not too bad. And comparing the charts, so for this chart, again, slightly went down. It actually continued that momentum in 2020. It seemed like a big coincidence because it was already going down since 2018 and then solidified it in 2020. Well, obviously in 2020, it started to go up again, and then it kind of stayed flat from there. If it reaches lower lows, like I said, close to around 62, if it reaches 62, that's a dangerous level to be going into this stock, and we might see lower lows. Who knows? I think it'll go into lower lows. So with the 5-year, obviously it was on a downtrend. 1 year, obviously in a downtrend. So for the fundamentals, they failed for the long term. I can't say for the short term. Because it hasn't reached new lows, but it's getting there again. And you can see these jumps and these dips. Very, very dangerous stock to get into. These are stocks that I don't really like. I usually like more certainty, where it's going pretty much straight down. Choppiness I can deal with. It's just, it's just a matter of preference. It's just easier to deal with. But the chops, you can see that it's obviously in a downtrend. Look at the 3 month. It's hard to notice that, but if you start from here, from this point, it's not much of a uptrend. So you see this one, and then obviously here, you see from this point going down. So it's trying to, I wouldn't say it's trying to break out, but you can see at this pivotal point right there, it hasn't reached past those highs. He's bouncing around trying to decide what range they want to be in, or what trend they want to be in. So for this stock, we're gonna look at the analysis real quick, see the quants. So it says that it's high quality. I can't really determine that. So they ranked it at 8 out of 10 for quality, and then for the income of 5.5, I don't really agree with that. Growth is at 7.6. So again, the highest rating was quality. Again, I may be wrong. They might be doing something right and increasing the value, but I just can't say for sure. Overall rating for this stock, they gave it a 4 out of a 5. So company has been outpacing these earnings and trying to outgrow their, estimated earnings that have been projected for them. Now, if we look at some other numbers, we're going to see how they've been doing compared to the last 5 years. So they're on par for 2021 results. So it seems pretty flat there when it comes to return on assets. 2022, I would love to see results because we're in a down year, and then if they can hold up those margins and stuff, which some companies might not, they can still do pretty good. For this stock, earnings per share has grown over 60% when you look at the 2020 comparison versus 2021. Margins, it's not showing me. The debt, obviously, it's going to be close to 90. It's pretty typical. Cash flow has grown tremendously. Now, we will see if the cash flow has been managed properly. Net income has grown at least 50% from 2020 to 2021. It's not showing me revenue or anything. So, again, 90% debt. Now we want to see if the cash flow is positive or negative, and by how much, and what they're able or willing to do with this money. Now, I'm going to see here for investing, so that's -9. So it looks like they're in the negative, and not by much, but overall they're in the negative. So this stock is definitely not worthy of it. The dividend raises have been at least 5 cents, which is above average for any given stock. So ever since 2020, went from 27 cents all the way to 33, and then from 33 cents in 2021 jumped to 40 cents, which is a 7 cents increase, which is pretty good. Averages around between 3 or 4 cents. 5 cents is like average, slightly above average. Now, when you start going above 5, then it's looking pretty good. So, again, they have negative cash flow, but they're willing to pay increasing dividends. by that much. And it seems like they can afford it. But then when you factor in other things and see what this company really does, it's just hard to say. So obviously nothing special reading about this company. It's something that you have to look at the website and really decide and see what they do. And I wouldn't say become a customer, but I'll have to dig deeper to see. But again, negative cash flow says it all. I'm going to say no to the stock for watch list. So definitely move on from that one, and we'll go on to the next one. Next one is BANC, Bank of California. That is a definite downtrend. You can just see it going down. See right there. And then $15 for stock. Market cap is at 952, showing me that it's undervalued. Dividend is only 24 cents for the year, which is awful. Too small of a company. So obviously this stock is not good for the long term. It is much better for the short term. And then we're gonna see what factors that they have. They rated it 2 out of 5, and then highest rating that they have received was growth, and I want to see why that is even a factor. Earnings look flat, even though they've met their earnings in Q2. They beat it in Q1. Q3 they missed it, but not by much. So Q4 seems about the same, requiring about I'd say mid 40s. So here it is, estimating 43 cents. And again, they have not raised guidance for their estimates or lowered them either. So yeah, we'll see. I don't think this company is going to be good even for a short-term play anyway. The volume has to pick up much more than that regardless. So ROA is really weak in 2021, not even 1%, so which is understandable. We have ROE for 2021 at 6%, over 6%. Earnings have been better. I would expect it, a little bit more. I would have expected. Debt is slightly better than most companies, 88%. So not too bad. But again, the cash flow is the main factor of what's gonna have some interest in this stock if people want to invest in it or not. Cash flow, we're gonna see if they are positive or negative. So slightly positive. So at 105, they have about 8 million left over. So with 8 million, you can do, some investing with that, or reinvest in it some way, somehow. It can definitely, I'd say, cover the dividend or use it for further advantage, for further use some way, somehow. I don't know, but they seem to be doing okay, but for the share price and again for the market cap, I don't think it's worth it. They've been on a downtrend for the past year. I don't see that going higher anytime soon. I'm sure there are better stocks out there, so I'm gonna say no to this one as well, and we'll move on to the next one. Next one that we have is STBA S&T Bancorp. So major move. I see this right away from 29 to 37. Again, I didn't look at the price, just the move alone. That is a definite bull trend. Just to break new highs, and then on top of that, hold that position and that price range for, I'd say, a few months, maybe a month or two at most. So you can see here the volume has not gone over the 3-month volume, but PE ratio is at 11.7, so slightly undervalued. Earnings per share is at 3, dividend is at 1.2, market cap is at 1.37, so they're a small cap company. So 52-week high and low, a difference of 12, barely met the minimum requirement of $10 when a price is at low. Now for the 5 years, you can see it's been holding pretty flat, but for the year, it's been on a pretty good uptrend. So you can see here the last month it's slightly been going down again, losing that share price. So it doesn't seem like much, but a $2 move within the month, that's some damage done, ruining the trend, just because it's not holding up like it was. So who knows, it might go up, but the slower the better. When you have these slower moves going like that, it's crazy to say, but there's more certainty because you can watch the move go into it, whether it's going high or low. Just these small movements. When you have these big moves, it just seems reckless and careless. Doesn't seem like stable, pretty much, and you just don't know what's going to happen or what's going on. It just feeds into the uncertainty. So quant ratings, they rated this a 4 out of 5 overall. Momentum is at 8.83. I agree with the momentum, but to rate it that high, I don't know why, I don't know how. Quality is at 7.4. That's actually not too bad. Income 5.15. Income, I think it's pretty low. Better stocks out there overall, so I don't agree with that. Again, not a 4 out of 5 rating for this stock. I say maybe 3 out of 5. Again, these earnings here for 2021, 2022, starting 2023, I would like to see them try to beat these estimates. If they can, then this might be a pretty decent stock. So for this stock, looking at the chart, it's starting to lose momentum, but again, anything can happen. But for the 5-year, long term, starting to drop down again just within these past few weeks. They haven't broken new highs. If they would have broken the latest high from the past 5 years, which was in 2018, as you're seeing here, close to about $40, then this would definitely be a stock to look at. So I think this stock is doing okay. Needs some work for the long term, but for the short term, looks okay. I'm gonna say no decision as of right now because I see some decent qualities for short term, but for the long term, I'm gonna say no. Moving on to the next one, which is Citigroup, which is ticker symbol C. This is a major bank, market cap at 90 billion. This is definitely a stock we're gonna cover. All numbers. Volume is pretty high, very active stock. PE ratio is a 6.29, so pretty undervalued. Earnings per share 7.42. Dividend is at 2. 52-week high and low, a difference of about $30. Not too bad, but considering the dividend, I think it'd be more than that, but oh well. So average volume for the last 3 months was about 18 million, and that's the average. Now I want to see what shares are acquired. Not many shares being acquired, so it only looks like about I don't know, am I seeing this right? So a billion, I'm trying to think how many zeros in a billion. I think there's 9. So if I'm seeing this right, so that would be 8. So that is a lot of shares. So if I'm reading this right, it would be, is it 10? Is it 10 million shares that are acquired here? Or is it 1? So anyhow, last 5 years, see this double top here, 72 high. Even in 2021, mid 70s, couldn't break past that. All of a sudden, now it's the downtrend. This would definitely be a stock to get into and out of for the long term. What I mean by that is, it's good to hold on to this stock when it's going down because they're a popular stock and they're a monster market cap. So definitely to take advantage of this company and this stock when it's pretty much reaching its 2020 lows, and then it would be nice to gain some momentum maybe over a year, and then right after a year collect dividends on the way, and again sell that position. So for the very long term, I'm gonna say no, but for the long term, about a year, a little bit over a year, I would say yes. I don't know when. I can recommend any dates, any amount of shares or price ranges. I can only say from my perspective. So for this stock, definitely on a downtrend for towards the end of the year, and then for next year, we'll see how that feeds into the trend. Now, looking at the analysis for this company, value is at 9.42. So definitely the price is telling me that's really, really cheap. Quality is at 5.57. So I just don't know if that's accurate. Rating overall for the quant rating, a 3 out of a 5. So for this stock, it's telling me that it's pretty cheap. Now for the financials here, they have been beating estimates for 2022, but the stock keeps going lower. Obviously, with interest rates going up, this is a monster company, so over 90 billion. You would imagine all the deals that they're doing with the interest rates going up and down. Well, going up really, but eventually going to go down. So for banks, it's a no-brainer to get involved with the right banks. So with this stock, it's at ROA, not even 1%. Return on equity, which is not too bad. 2021 was definitely a good year for this company. Debt to asset, 91%, pretty typical for a bank. Now, we just want to see the cash flow. For 2021, definitely the highest net income in the last 5 years. So balance sheet, again, it was 90% debt. And then for their cash flow, that is what we want to look at. So financing will have to be over 60. So they have negative cash flow. I'm surprised to see a company that large with the negative cash flow that big and that wide. I wouldn't be surprised if this company cut dividends. So even if they use their net income, they're at least close to $40 billion negative. That's quite some change there. So you can see their dividends have not increased ever since 2019. and have remained flat. So has this company ever done splits? So they have. Last one was in 2011. Again, this company is definitely good to hold on to a year, have some gains, and jump out. But 2023, I don't know. This is a risky stock actually, just because of their cash flow. But I'm sure they wouldn't have trouble raising money. But again, the shares need to be of interest to people to buy these shares and get into this stock so they can do better. So for this stock, again, I'm gonna say yes, just because people like it. For the long term, only up to, and I think I've never said this before, but up to 1 year to hold onto this stock to consider it a long-term investment. So again, 365 days. Holding onto this years and years and years, I wouldn't recommend it. I mean, I wouldn't be surprised if this company had to sell some assets as of next year, or I wouldn't say they're going to do horrible, but this company might run into trouble looking at what I'm looking at. And it's not going to end very well. Even with job cuts and all that, we're talking billions, not even in the millions, we're talking billions, because this company is so deep in the hole. I guess they will have to do splits again, definitely, and even cut the dividend. So that wouldn't be surprising to me at all. So for the long term, like I said, no more than 2 years. Only hold it for a year just to get some gains and exposure, and that's about it. So we're gonna move on to the last stock, HTLF, Heartland. So $46, and then we have 4 million shares here that are acquired, and then we have 52-week high and low, a difference of at least $10. Showing me it's undervalued. So this stock pretty decent. Want to see what is going on with the chart. Let's move it to the 5 year. It's looking pretty flat. Not feeling it. Don't see much of a breakout or new highs. Obviously, we're in a tough environment with the sentiment overall. So now we're gonna look at quant ratings. So highest number for this one was 6.56. Overall rating they gave it was 3 out of 5. Momentum, we're gonna see about that. Let me look at the earnings real quick, and then we'll look at the charts and all that again. So they're beating some estimates here. So now we're waiting for Q4, which was increased. So if they keep increasing these estimates, it's just gonna make it that much harder for this company to have their earnings beaten, and then on top of that to succeed. So I'm just gonna skip all this and go right down to the cash flow, since I don't have 2022 numbers anyway. So cash flow, is it positive or negative? So we're looking at about 200 million. Let me see. They are cash flow positive. And to be exact, let me see. So less than 100 million, they are positive. It's crazy to say that smaller companies manage money better than the bigger ones, and obviously when you grow, you're getting greedy and you start to make some mistakes and mismanagement when it comes to money. So for this stock, they can. I mean, I would have to multiply the share price by how many shares and see if the money of under 100 million can cover that amount for the dividends. I'm just thinking about it. I don't feel like doing the math. But I guess once they're positive, I mean, that's me digging deeper, but again, I don't want to make this a longer video, so I just want to go over some companies and look at that. So HTLF, to add to the watch list, yes or no? Let me look at the chart again. So for the 5-year, I think they were flat. So 5-year, they look pretty flat. So I'm gonna say no for this stock. So that's about it. That's all I have for you guys. Thank you guys for watching. If you're watching, I know my videos are long, but very informative and very knowledgeable and helpful. So again, I only had one stock, which was Citigroup. All the other ones were no's. And again, this is the only stock that I wouldn't say I liked it. I'm only saying yes because it's popular. That's really the only reason. Again, next year this company might be in trouble, and I'm stating that now. But this is definitely a stock to put on your watch list, because obviously the big banks are hard to fail, and you know how bailouts work, always asking the government for money, and they want to say they're helping their customers when they're really trying to save themselves. So I wouldn't be surprised if they get bailed out. This is definitely a company that is too big to fail. So that is why I'm betting on it, pretty much, just because of the market cap. And that's pretty much it. There's no other reason. They're negative in cash flow. Again, dividends, they got to cut or do some splits. You know, a few $1 billion is some serious money. So negative 40 billion, it's not going to end well. That doesn't look pretty. Just for 40 billion alone, that's a few companies in itself, really. So again, just because of popularity, Citigroup is a good stock. You know, just because of the popularity of this. Other than that, I think it's an awful stock, really. So again, keep an eye on it, but don't even invest in it. I think once, for me, the green light would be when banks start to fail, worst case scenario, and then all of a sudden they start receiving funding for some reason, for some odd reason. And Citibank, I mean, I keep saying Citibank because they do own subsidiary of banks that are called Citibanks. So yeah, that's the only reason, because of popularity. So that's all I have. Let me let you guys go. Enjoy your day. It's nice and sunny here in Florida today. Christmas is coming up, so stay safe, and I'll see you guys in the next one.